Hey everyone, Brian from Bear Traders here. It's Wednesday, July 14th. We are more than halfway through the week. And this is the midweek video. It's where we take a look at where we've been so far and take a look at the rest of the week, how things are shaping up here. So let's get down to it. Okay, here. And so, of course, before we get going, I'd like to always throw a quick plug in for my book on Amazon, How to Swing Trade. If you have not checked it out, it's there in paperback, audio, and e-reader. So if you feel like checking it out, there it is. So anyway, let's get down and talk about the markets and what's happened so far this week. As you know, we had CPI number came in hotter than expected, a lot more inflation than what was even anticipated, and that resulted in um, yields popping up a bit here, as you can see yesterday. So today we had a bit of an inside day on the TLT, which is the price of the 20-year bond. So we had a big pop in yields yesterday, and then bit of a drop in yields today. So it's still choppy price action. We're still down below the 200-day moving average on the TLT here, and you can see here again on the 10-year Treasury, we're just hovering around the 1.4 level. So again, good for low interest rate, good for the technology sector, as we'll see that in a minute. And you can see here the transports on the daily. We tried to rally off this this opening and came right back down and closed pretty much flat on the day with the transport. So we are still in a downtrend. We rejected from this 20 moving average. And why we look at the transports, because in theory the transports are a good indicator of where the Dow might be going and some of the other indexes. So you can see here on a week, we're down on the week so far, another percent or so. Still we've broken this uptrend, and that's a bit of a warning flag on the track, I would say. And the Dow, again, kind of a indecision candle. We're hovering right at or near all-time highs. Again, we finished sort of middle of the range here, up just a fraction, and really just stalled out here. No real catalyst to take us higher at this point, but we do have a lot of earnings coming up, so maybe that will push the stocks through this 35,000 level on the Dow. You can see on a week we're up just a hair, and again, just everything's a little tentative. You can see here on the weeklies we're just continually dropping on volume, which isn't really surprising because we are into the thick of summer, and that's typically a time of year where volumes do drop off. So you can see the Qs here on the day. We gapped up nicely, sold off, only finished up a fraction on the day on the Qs, but nonetheless we did finish at a all-time high. Close the day out at an all-time high, and you can see on the week here, indecision candle on the Qs, but still in an established uptrend for the Qs, and that's of course being held by the low interest rates that continue to persist here. So the SPY, you can see here, we had a pretty big volume day here, a bigger than average volume day on the SPY. Again, started higher, sold off a bit, did come back, and the buying brigade keeps coming in to save the day there, and keeps the SPY moving higher. And you can see on the week so far, we're still up 0.17%, again, just a fraction, but yeah, just everything still seems to look like we just going to continue to grind higher. And IWM, of course, this is the index that just continues to struggle here. You can see here we had a really nasty day, bit of a big sell-off almost from the open all the way down. We're back into an area where there's probably some support. You can see here these big volume bars. If we get through this 216, 217 level, there could be a flush down to 211, so keep an eye on the IWM, and if you want to play that to the downside, TZA is the ETF, levered ETF. Again, you can see on a week here, just not a great looking chart. It looks like some pretty solid topping price action. You can see here RSI, momentum indicator, rolling over. Same with the stochastics. rolling over, MACD's histogram sloping down. The IWM again breaking this 20 moving average here, so you can see we're teetering on even more probably significant breakdown if we continue this direction here. The dollar up yesterday on the CPI number, down today. So again, some pretty choppy price action here. Market trying to figure out where things are going. And the volatility, again, there does not seem to be any fear. We had a bit of fear coming yesterday and got wiped out today. So the TINA trade, there's no other alternative. Stocks continue to be the only place where money seems to want to be given the low interest rates. So that's kind of where we are. So let's take a look at some actives quickly here. DBC still have some in that. Ford still long some calls, long dated calls for later in the year. I did enter this GDX, some gold trade. I kind of feel like it yesterday it started to break out. So got a nice little pop today, although we were well off the highs, unfortunately. Would have liked to have seen it finish above that 35 level, but just in that now. HGU also took a position in my Canadian accounts on gold. Again, if the dollar continues to look weak, then that'll help. ICLN, I took the rest of it off today just because it started to break down here. And same with MSOS, did not want to break out here, so I had a big down day today and stopped out of that one, flat on the rest. So that's where we are right now. Let's again take a look at some of the sectors, candles at a glance here. You can see here consumers discretionary is starting to struggle. And the SPX, again, we talked about that. Communications, technology still in a solid uptrend. Industrials kind of toppy, a bit of toppy action there. Maybe doing some chop sideways. Same with the materials. Energy really took a hit today. And that's really not a good sign. You usually expect energy to be strong in a strong economy, but somebody's seeing something here that I think concerned about maybe some of the variants. I keep hearing more news about how some of the states are really starting to see a spike in this in the COVID cases again, and some other places around the world. So a little bit of concern there. You can see a flight to safety with Staples going up today. Big move today, breakout on as a safety trade. Usually Staples are a safety trade. XLU looks like it's ready to start to break out again, just like Staples was here. And financials, again, financials have been reporting this week. And again, sort of same reaction they're getting the last season. They get good earnings, good reports, and really very little price action. So good way to play those with selling out of the money calls and puts, and there's really no movement one way or another. You just collect the premium. So did that with JPM today. So anyway, that's about it, everybody. Let's take a quick look at the markets. So you can see here the Dow looking like it's opening a little bit down. S&P pretty much flat. Q technology pretty much flat. Everything's pretty much flat right now. Looking like a flat open at this point. You can see gold's up a little bit. Like to look at that. Oil's down a little bit more here. And some of the treasuries are all trading down a little bit. But again, doesn't look like there's a lot of fear in the market. But again, it does look like we're kind of toppy. The Qs, however, still look, and SPY still look solid. The IWM small caps are not looking healthy at all. So some stuff to keep in mind as we go into the rest of the week here, and of course get into the next week and earnings season pretty much in full swing with lots of other companies going to be reporting as we ramp up. So that's it, everybody. Hope you had a good day today, and we'll see you in the morning, 8 o'clock, live on YouTube. They'll find Jared at Engineering the Markets. 8:30, we'll do the pre-market show and take you through the opening trades, what's in play, what isn't, and then, of course, trading the market open at 9:30. Hope to see you all at one or more of those events. Have a great rest of the evening, everybody. Bye for now.